Oh, it's you, Osama. Gotcha. All right, guys. So we'll just start going over a few setups and a little bit of the market. So typically, I like to do most of my prep Monday morning. So on Sunday, I'll just kind of see, what happened in the week, how the futures open up. But I'll do most of my heavy prep work in the morning just because everything ends up gapping up, gapping down, so it's just easier for me to do it in the morning at once instead of revising all my setups. So we'll just go through, some of these things. So we'll start off with the ES. So as you can see, futures opened up green and they are pushing up pretty strong. They opened up here. They just been pushing all night so far as since they opened. Um, and the way I'm viewing it is generally I have this boxed off because that to me is a chop zone. And as long as we're inside of this area, we are technically in a choppy market. We can go back down, shoot back up, gap down, gap up, and continue doing that. So that's why I have this drawn. Once we exit this area is when when everything is moving smoothly in one direction. And just to give you guys a perspective, inside of here we also started squeezing on the daily chart, and most of you guys in my squeeze webinar, so we cover that. But essentially meaning energy is being pent up, it's being built up. The stock is taking a break and is getting ready to make a big move. And you can see we had a similar squeeze right back here, right? So in this whole area, we were squeezing again in this area, right? And we saw a squeeze, we saw a consolidate chop. And once we broke out of this daily squeeze, the market just basically for about a week or so, 2 weeks, just ran pretty much straight up, nonstop every day. And ideally, these days over here are when you want to be trading. That is typically when you get the easiest trades. That is when scalping works the best, day trading works the best, swing trading works the best. These are the opportunities where you want to size up, take your big plays, make your money. And, when we start squeezing and consolidating, that's when you want to get more selective. You want to take a step back, size down, be careful, and just, take it easy basically, right? But you see what the market did. It consolidated, it broke up, had a little pullback, a healthy pullback. It's consolidating, and now it's trying to break up and continue going. So to me, so far, this looks like a healthy uptrend, right? We're making higher highs, we're making higher lows, and here again, we made a higher high, we made a higher low, and now we're getting ready to hope, if this breaks out, to make another higher high. So let's see. The Fed is still buying up aggressively. So we could still continue seeing the trend. And that's, I don't like to dig too deep into it and get into theories. Simply just look at the chart, see what it's telling you, and play it off of that. So, big picture wise, the market was currently in a daily squeeze, and it still is. We're still in this range technically, and now we're just keeping an eye on to see if we can break out, break above this area. If we do, we can expect the next resistance to be, around this area, right? The previous high. So I'll go into a little bit of how I do some of my prep. So SPY is typically what I watch, and this does not update on Sunday night. But this is just what I draw my levels off of. But the same story here, right? We were still chopping around this area, right? So this is these are my lines. So we, as you can see, we're still chopping around in this area for all these days. So which is just complete chop. Everything is going to be chop, right? Up, down, crazy gap up, gap downs. This is where you want to be careful. So hopefully tomorrow when we open, this should be right at the top of this line, if not breaking out of it. And once we do break out of it, we should see some resistance probably around, maybe some around right here. Probably see some more resistance around this area. The main resistance will be, we want to see if we can break that previous high. So and that, I mean, that's about it, right? I don't go too crazy with this. The other thing that I do look at for reference are the SMAs. And the way I use them is pretty straightforward. So I'll just look at this and I'll see, hey, we're above the 15 SMA, we're above the 21 SMA, we're above the 200 and the 50. And these act A, as a area or line of support and resistance, and B, they show you a trend, right? So meaning if price action is currently trading around any of these lines, I would view that line as a support or resistance and watch it to see if we bounce or break through, right? And as you can see, we were kind of just really chopping around all this area. But as of right now, we are currently above all of our lines. And that's how you use, phase two, the other way of viewing this, which is, the strength, right? If we're trading above all of our EMAs, that shows strength. If we're trading below it, it shows weakness. So we're currently above all of it. So simply put, it looks like a strong uptrend as of now, right? And the last thing I typically, will look at is the Fibonacci lines. So these are the Fibonacci retracement lines. You know what? Let me delete this and show you guys how to draw this as well. So the reason to use this tool is you basically, so you're going to come to tools. You're going to find the Fibonacci retracement, which is this one right there. Click that. And you're going to start by starting at the previous low of this trend and marking the next line at the previous high of the trend. Okay? And what that will do is it'll draw these lines for you. And these lines typically, when you're in a trend, it'll show you, for example, over here, we gapped up this far. It'll show you what the next realistic possible level of support will be. And as we saw, we came all the way back down here. What's up with Danny? You can join the meeting after the host admits you. Go up. Let me see how I can get Danny in here. Yo, Danny, are you in? I think Danny should be in. Yep, Danny's in. Okay. All right, so as I was saying, these are the Fibonacci retracement levels, right? So I'll draw these up and I'll view it, maybe like a couple times a week. And, typically they will show you generally good areas where we can retrace back to, right? So as you saw, at the top of this, when we came here on this day, if you drew this, you would have known, you would have seen that, the next logical level that we might retrace back to is a 23% level, right? And that's exactly what we did. We came back, bounced up, came back, bounced up, and now we're trying to push back out here. And that's typically, so that'll give me a level, right? It'll tell me a level. If we break through this, then okay, that means now we can retrace back to this. If we break that, then we can come back to this. And typically, if we break the 50% level, that's when, you can assume that this uptrend is pretty much over, right? It's not a clean uptrend anymore. We could be in a very strong reversal and continue all the way back down. So I'll just kind of throw this on there to get an idea of, the levels and whatnot. But besides that, the biggest thing to be aware of is if we're trending or consolidating, right? That'll generally give you the idea. So again, even over here, you can see SPY is technically in a squeeze here, and we're chopping, right? So if we were to look at ES, this alone should tell you the whole story, right? We're consolidating, squeezing. We break out of the squeeze, we're running. You want to size up and play in this area. This is where you want to make your money. And then boom, we have a nasty sell-off. And then we start, messing around in this chop zone, basically, right? Which we also know is consolidation, aka the squeeze. And now we're looking to see which way the squeeze is going to fire, right? And everything so far is lining up basically to the upside, right? We can see the momentum bars are pushing up. We are holding up above the 21 EMA. If you were to look at any other, we're above the middle Bollinger Band. So everything basically so far looking like we will continue moving upwards, right? We want to basically now see for confirmation if we can break above this area and continue trending. And then, obviously if we break above here, we're going to really be, pushing up. And that's it, right? Markets typically only move either sideways or they're trending. They're trending up or trending down, or they're moving sideways. You want to size up and go heavy when they're trending. When they're chopping, you want to take it easy, take a step back, and maybe do different strategies, scalping or put spreads or whatever it may be. So I mean, that's about it, right? There's no reason to really overcomplicate it. That's where the market is, and now we'll see where it goes. So besides that, the two main setups I'm personally looking at for day trading this week is my, Tesla with Elon Musk and the shorts. So the setup I'm looking at here really is on the 1 hour chart. If you can see, it ran up, consolidated, ran up, consolidate, ran up, consolidate, and now it looks like it's making another nice bull flag, and we could be setting up for another nice push up, right? So that's really, it's a pretty straightforward, simple setup, just playing the trend. Once it breaks above the high, I'll be scalping it and pushing it up. And just some, I guess, extra things that I personally look for is the squeeze. So in the 30-minute, it was squeezing. Looks like it's firing to the upside. And with ES, gapping up overnight, this could potentially set up for a really nice break tomorrow as well. So that's one setup. Very simple, very straightforward, nothing crazy. And in terms of how I'm going to play it, I scalp it throughout the day if it's trending nicely. And the other thing I like to do is sell put spreads on it. So I do vertical credit spreads weekly, and those are high probability trades. And we can maybe do another webinar on that. But those I typically do just as more consistent paychecks, right? So every week it'll clear a couple $1,000, and just the credit spreads. It's high probability. It pays your bills. You can build your account, and then I'll scalp it if it's a good, nice trending day. I'll just get in and scalp it for some extra money. So that's typically how I play with Tesla. The other setup I'm watching is Facebook. So it's been on the news. They got hammered with all their, recent, all the companies that are pulling the advertisements. They have earnings coming up as well. So very simple setup on this. If it breaks below this area, I'm looking for more weakness, typically down to this level. And these are just very basic support, support and resistance levels, right? And if they can get above 239, then I am looking for a move, maybe a small scalp up to 240, and then the larger move would be back up to test the highs. And so far, market is looking strong. Let's see how we open tomorrow. But if we can, start pushing up, that could be a nice, move up to there as well. So I mean, that's about it. That's all I'm looking for so far. Typically, Monday, tomorrow before the open is when I'll go through and see, where everything is gapping up to or gapping down to, and then come up with my plays and see what the catalysts are. But these are just some nice setups I saw tonight. Besides that, 4 of my larger swing trades that I'm looking at, I'll go over those real quick with you guys, are the squeeze setups that we talked about in the previous webinar. So the first one is CMG, Chipotle. So the way I typically look at this is the 21 EMA and the squeeze. That's typically all you need. And the setup here is very clean, right? It ran up, consolidated, ran up, pulled back, and held nicely on the 21 EMA. And it's also been consolidating, aka squeezing. And we can see the energy is building to the upside, right? It's also forming, like a rising wedge type of a pattern. So I can kind of draw roughly for you guys. Boom, right? So it's forming that rising wedge. So the move I'm basically looking for on this is a break of all-time high. So this has been a really big money maker for the past 2 months. And the setup is a squeeze on the daily chart that's respecting the 21 EMA. That's right under all-time high. And this looks like it's just about to break this and run like no tomorrow. So on this one, I currently have a put spread, a credit spread. at around this area right here. So meaning, and the expiration is in about 3 weeks. So meaning as long as Chipotle stays above this level by my expiration, I will collect max profit on it, which is $2,000. Right? So it can do whatever it wants. It can run up, it can run down, it can stay sideways. As long as it closes above this, I'll take my max profit on it. Right? And if it does break above this line and start running, I can just collect my max profit sooner. And that's just a very basic overview of credit spreads. And like I said, we'll get into that later. So that's one trade I'm looking at. Another one that I called out during the week is RH. So this one, again, very same setup basically, right? It's squeezing on the daily. It's respecting the 21 EMA. It's right under the all-time high. It's forming this rising wedge. So it's a very high probability trade, right? So on this one, I sold a credit spread down here at this level. And I also, towards the close of Thursday, I bought some calls right around here as well. With the stop loss right around the 21 EMA. And once this breaks out, it'll just be a huge runner. And just to give you an example of this trade, I think it was TTD that I took. Yes, so right here. Same setup on this squeeze, right? It was squeezing on the daily, right under all-time high, forming this rising wedge bull flag looking thing. Once it breaks out and the daily squeeze fires, you have a lot of momentum, right? You have a lot of setups, a lot of people looking at it for so many setups, right? They're looking at it for a break of all-time high. Some people are playing it for the break of the bull flag or the rising wedge. Some people are playing it for the break of the daily squeeze. So just you have a lot of short squeezes, so it gets short squeezed as well. So you just have so many catalysts pushing it up, and it makes a huge move up, right? So I mean, you could have done almost any strategy and made money on this. And there's a few other setups that we talked about in the previous chat. That's it can't come to mind right now, but you can go through all this, the charts, and you'll see the same setup and how well it plays out every single time. So another one that I'm looking at for the same setup again is Papa John's, PZZA. This one has been in a tight squeeze for a long time. It's forming this rising wedge again under all-time high. It's been respecting the 21 EMA roughly. So this one I actually bought shares in this one. I have actual stock on this day. I loaded up on stock, so I'm just looking for a break. Maybe make like a $5 move or so, and I'll cash out of that. But again, same setup. And the last one I'm looking at is JD, Jet Direct. Again, same setup, squeezing on the daily, respecting the 21 EMA, right under all-time high. And these are very, 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 very high probability trades, and they pay phenomenally just because once they break out, you just have so many catalysts for it to break out. So they pay very, very, very well. And I think we had the same setup in Tesla on the 4-hour chart. And this is a setup I talked about last time, which was right around this squeeze, right around there, right? So again, this area, same setup. It was bull flagging under all-time high, squeezing on the 4-hour. And this one I went in with put spreads and naked calls. And it pays. You can see how well it pays, right? Every fire on the 4-hour squeeze it pays. The setup is a high probability setup, and it's it works very well in in this market. So those are the 4 swing trades I'm looking at. So besides that, the other thing I wanted to touch on that Izzy wanted me to talk about was just market internals, right? So and this is something Umar talks about a lot, Umar Ashraf. And actually, a lot of the big traders, they're looking at SPY, but they're looking at other indicators to get an idea of what's happening behind the scenes under the curtains, right? And there's a few, I guess tickers you can put on your watch list and just go through it daily just to get an idea. So the first one, the biggest one, is VIX. This is the volatility index. And the best way to think of this is the fear index, right? So when VIX is skyrocketing, that means there's high levels of fear in the market. And this also ties in with options and the IV of the options, right? When VIX is through the roof, IV in almost every stock is through the roof. And when IV is high, you need to trade more carefully. There's only certain strategies that work with high IV, and so you got to be aware of this, right? When VIX starts dropping, that means fear is leaving the market. So the simplest way to think about this is when VIX is going up, SPY is going to be pushing down. When VIX is coming down, SPY is going to be pushing up. And you guys, if you want, when you get the time, after this, go look at SPY and go look at VIX on the daily chart, and you will see the correlation. So this peak, this whole peak from here to here, is this whole peak down. And as soon as volatility starts dying out, we start making our way back up. And boom, around this area again, when we have another peak up, boom, we have another pullback. And then volatility starts dying out, and we start making our way back up. So VIX is something you guys need to be keeping your eye on at all times. And you can go back 10, 15 years and compare the chart of VIX and compare the chart of SPY. You will see whenever VIX starts spiking, fear is entering the market, SPY starts going down, the whole market starts going down. So this is a very, very, very important thing to keep an eye on. So the simplest way to understand it is if VIX is going up, SPY is going down, and vice versa, right? Fear is coming in the market, which drives people to sell, and you get this crazy selling pressure. When fear starts leaving the market, everybody starts getting aggressive. FOMO starts kicking in, we start rising. So that's the simplest way to look at VIX. And just to be, for those that are a little bit more advanced, VIX ties in almost directly with IV. When VIX is moving up, it means there's fear in the market. IV starts skyrocketing, and that affects your option pricing, right? Option pricing gets extremely expensive. It's harder to make money on it. They move a lot slower. And on the flip side, if you're trying to scalp and VIX is falling from these high levels coming down, or on these days when it's coming down, and you're in a day trade, and let's say that the stock is just moving sideways, or even if it's moving up slowly, but you see your option is actually losing value, that is because VIX is coming down, aka your IV is coming down. Your option is losing value because IV is coming down. So that's another reason if you're day trading or scalping, you need to keep an eye on VIX, right? If it's really coming down heavy and your stock is not making the move you want to make, you need to get out because you will lose money on it, because you will lose option premium when IV starts dropping. Okay, so that's VIX. This is something you guys should be looking at daily and pre-market every single day. The next thing, so this one is the put-call ratio. So this one, I typically just look at it once a day after the market closes, and just to get an idea, right? So typically, if we are all the way down here, that means everybody is in calls. Everybody is holding calls. The market is very, very bullish. And what does that mean, right? Psychology will tell us, trading psychology will tell us when everybody's bullish, that's when you should be expecting a pullback, right? Because a simpler way to think of it is if everybody's buying, there's nobody left to sell, where are you going to go? It's basically like a wall, right? So you're going to get a pullback. So when we are at extremes, you should be expecting a pullback. You should be careful with your swings. You should be hedging them. You should just understand what can happen in the market, right? We shouldn't be surprised if we're down here making new lows, meaning extreme number of calls. Everybody is bullish as hell in the market. We should not be surprised if SPY takes a nasty pullback. And if you compare this day to SPY, this was the day when we had that crazy recent pullback on SPY around this area. That is when this was at the peak, and then we had a correction, right? We came back, we corrected, we came back into neutral territory, and now we're kind of hovering around here where the market is still more bullish. There's still a lot of calls, but it's not extreme, but it is there, right? So generally, I just have these lines that typically below this level, below zero point 0.8, you should expect a pullback. And that doesn't mean a sell-off. It just means you should be expecting a healthy pullback soon. So that means IV dies out quickly Friday. What do you mean Friday? Why Friday? Well, Friday IV dies out because it's the end of the week, and if you have same day expirations, you know, they're expiring basically by 4, they're going to be 0 anyways. So that's why your option pricing decreases on Friday. But if you're talking about VIX, when VIX is making a drastic move down, that means fear is leaving the market. IV is coming back to normal. When VIX is high, that means there's fear in the market, and that also means there's more volatility, meaning stocks will be making larger than average moves, right? You'll be seeing big gap ups, big gap downs, higher ATRs. And if you understand, how IV is priced, IV is priced off of how, what market makers expect, how big of a move that stock is going to make. So if VIX is, up there, that means there's fear in the market, there's high volatility. High volatility means stocks are making larger than average moves. They're gapping up, gapping down, which means market makers are taking that into account. And that's why there's a high IV. So they're, basically it's rigged, right? It's rigged for the market maker to make money. So if stocks are making these huge moves, they're going to price it at a higher level where they won't lose money because, they options honestly are for the market makers to make money, right? So they're basically, priced against us. But that's generally how VIX works. Okay. So where were we? So the put call ratio. So this is just something you want to keep an eye on. At the end of the market day, just see where we are. If we're all the way up here, right, like where we were after that big coronavirus sell-off, we were way up here. So smart money knew that we should now be expecting a rally, right? Because we've exhausted the shorting. All the selling in the market is coming to an exhaustion point, and we should expect a rally or a retracement. And we were in this area for a while, and then boom, we came all the way back here. And then smart money knows we're overextended. The bulls are out of breath. They need a break, and boom, we get our pullback. So now we're kind of just we're kind of just middle zone, kind of almost. So just keep that in mind. Check that daily. The other one is skew. So this one is something it kind of ties into the put call ratio as well. And what skew basically is telling you is hedge funds. When skew is above 135, that is telling you that hedge funds, the big money, they're scared, right? And what do they do when they're scared? They start hedging. So when it's above 135, they're hedging. They know something is going to happen. They know there's going to be a pullback. Something is up, right? Or maybe they're just out of protection. They're hedging. When big money is hedging, we want to take note as well, right? They obviously have more information than we do. So if they're hedging, we want to hedge. We want to keep in mind. And if you go again, you can go back and overlay this chart with SPY, and you'll see, they typically know something, right? Either to the upside or downside. And over here, recently, last couple of days, they're hedging. They're hedging big time. So that doesn't mean we're going to sell off. That does not mean we're going to go back to new lows. That's not what it means. It just means big money is cautious. They're hedging, right? And if you take this into account, so over here we see big money is hedging. The put call ratio we see is still kind of towards the bullish side a little bit. You just want to keep the big picture in mind that we could have a pullback. It could be an ass pullback, right? That doesn't mean it's going to happen. It's just something to keep in mind that it could happen, right? Because right now there's a lot of other forces at play. Fed is stepping in. So there's a lot of other reasons where we could just ignore all this and keep running. But we need to do our due diligence and we need to be prepared. And this is part of that preparation. So those are the top 3 main things I look at in terms of just getting market internals. And A few other things that I look at quickly every day just to kind of gauge market strength, where the money's flowing, are the following. So gold, GLD, gold, and TLT, which is treasuries. So gold and treasuries, when money is leaving stocks, it goes into gold and TLT, right? These are the safe havens. So generally, if gold is pushing up and TLT is pushing up, that's telling you money is leaving stocks, it's leaving SPY. So that tells you SPY is weak, right? That means big money is into gold and TLT, and SPY could have another big pullback. So it's not 100% always accurate, but it is something to keep in mind, and that is typically how it works, right? When there's big fear in the market, there's big sell-offs in the market, money leaves stocks and SPY, and it comes into gold and TLT treasuries, right? So just something to just keep an eye on it, check it daily, see what's happening. And besides that, the other thing that I typically check is I'll check the industry ETFs, right, to get an idea of what industry money is flowing into, right? What's holding up the market? Where do I need to be playing or focusing on, right? So you see XLF, that's a financial market. All the banks, you see, recently they're kind of just lulling, right? They're just going nowhere. And if you go and look at every bank, it's almost a similar chart, right? Look at that. Bank of America looks the same chart as XLF, which is the sector. JP Morgan, almost the same chart. Goldman Sachs, almost the same chart. So everything follows their sector, right? So if you can follow the sector, you'll know where money is flowing. Right, so that's XLF. XLK is technology. Look at that, just clean pushing up. This is what's been pushing the market, right? XLK is technology like Apple, boom. Amazon, boom. Microsoft, boom. Right, so these all follow the big, XLK. So you can kind of use this as a gauge as well, right? And the way I use it is I'll see, if XLK is pushing, I know I need to be trading and scalping the technology stocks. That's where the most is going. So I need to be trading those, right? Or if I see, the energy sector is, come on, XLE. If I see the energy sector is squeezing, I know that I can find some good squeeze setups in, these names are like CVX, Chevron, XOM. So I can look into those names for setups as well, right? So right now all the money's in XLK. Yeah, Danny, that's what's pushing the market. That is what is holding the market up, right? XLK is, I think, the only thing left, right? I mean, we can check across the board. What is this? SBI. This is something I don't even know. Energy stocks are down. Industrial stocks are down. Financials are down. Materials are kind of down. It looks like pretty much everything. And healthcare is kind of just moving sideways too. So yeah, basically it looks like the only thing holding the market up is technology. So if you start to see technology start taking a dip, SPY could collapse as well, because that is the only thing holding the market up right now, right? So again, I use these to just get an idea of the bigger picture. How do we trade in volatility? So that is a good question, my man. So volatility. So when this whole period happened, honestly, I think that is the first time any of us have ever traded in this type of a market, right? And I mean all of us, right? Including the people we learned from Umar Ashraf, Focus Trades, Taylor. Most, even I think last 10, 15 years, nobody's traded in this type of environment. And people got their asses handed to them, us included, right? We all took pretty big hits. Simply because most strategies typically just did not work flat out, right? Almost every strategy did not work, right? So if you were selling options, like I used to do, that did not work, right? Because we were just having these huge gap ups, gap downs. So that was out the picture. Swing trading did not. sorry, sorry, guys. So swing trading did not work either, right? So if you're swing trading, everything was gapping up, gapping down in huge amounts, right? So swing trading did not work. Day trading honestly did not work either, because we would have these huge midday reversals that would just wipe you out, right? Like if we went 20 points up, we'd go 40 points down, 50 points up. So day trading just wasn't working either. Setups were not playing out. Um, I think the only strategy that kind of worked was scalping, meaning get in and get out, take small movements, take your money, get out. And I think scalping was probably the only strategy. And even then, it was difficult because IV was through the roof, meaning, everything was just so overpriced, right? So it was hard to make money. Options were moving very slowly. But that was probably the only viable strategy, either scalping options or scalping. The safest strategy was scalping equity, right? The actual stock. So if you were trading, lower price stocks like AMD and trying to scalp these, maybe MU, so trying to scalp the actual stock, was probably the safest way. But scalping options was probably the second strategy that worked. But typically, honestly, in times like this, if you're not a scalper, if you don't know how to scalp, if that's not your strategy, don't trade. Sit out. Trust me. And that's a lesson we learned the hard way, honestly. Me, Izzy, I think almost everybody, any big trader you can find, we all took massive hits because it was a very difficult time to trade. And honestly, if we did not trade during this time, I think we would have been so much better off. Um, but it's tough when you're trading every day. You kind of get wrapped up in it, and so you get lost in that. But honestly, if you're wise enough and you see crazy volatility, sit out. Don't even bother. It's not worth it. Trust me. When, like, for example, the last 5, 6 years have been this low volatility. Like, look at that. That is beautiful. That is a time where you can make your money, right? So if you sit out 1 month, you're not going to miss much, right? You have the rest of your lifetime to make money and play the stock market. So that's my advice. Either master scalping and size down, or just sit out on in general. Okay, so the last thing I'm going to talk about, and then we'll take some Q&A, is ADD. So this is something you guys should be watching if you are day trading and scalping. This is a absolute must. This and VIX, right? So my typical setup when I'm day trading or scalping is I have SPY up, I have VIX up, and I have ADD up. These are the three market, I guess, gauges I look at. And ADD is a absolute must. And you want to view it on the 5-minute, right? So ADD is basically telling you basically all stocks if they're generally advancing or declining for the day. So in simpler terms, if most stocks are pushing down, meaning selling off, or they're pushing up, meaning showing strength. And if you're looking at SPY and ADD, right, on the 5-minute or 1-minute chart, you will see strength. You'll see SPY pushing up. You'll see ADD pushing up, like on this day, right, which will tell you most other stocks in the market are advancing, right? All the stocks in the New York Stock Exchange are currently advancing more than they're declining. So more stocks are pushing up, which means, what's that term? Rising tide raises all ships. Same thing, right? If you're trying to go long Tesla, Microsoft, Google, whatever, you want to make sure SPY is pushing up and ADD is pushing up. You basically, adds more wind to your back, right? It gives you a confirmation, another confirmation that, yeah, I can take this trade up and I can continue staying in it as long as SPY is pushing up, ADD is pushing up. There's a higher probability, my stock will continue to push up as well, right? And if you have certain days where you're just bleeding at the open, you don't want to go long, right? You don't want to try to catch a bounce when ADD is bleeding. That means most stocks are pushing down, and that means SPY will push down as well. So if ADD is bleeding, you do not want to be the guy that's trying to catch a bounce or a reversal, right? Wait until it shows you a confirmation. Wait till it bottoms out and it starts pushing back up. Then it tells you, great, everything is bouncing now. Now it makes sense, right? And if like this day over here, the morning was just chopping. ADD is typically just moving sideways. SPY, I guarantee you, is moving sideways on this day. And when this starts breaking the low of the day, like right around there, right? Starts breaking below that, It starts bleeding. It starts bleeding heavy. I guarantee you, SPY was bleeding heavy on this day. What do you want to do? You want to look for short setups. You want to look for short opportunities. And this thing bled all the way down. Had a nice bounce. If you wanted to catch a bounce trade, boom, that was your bounce trade. And then it chopped. It was chopping sideways. So you don't want to be in the trade when it's chopping. And typically, let me go back to the 5-minute. Typically on days where, like, check this day out, clean run up. They're just pushing up all day. So you could have taken any trade long and you would have made money on this day, right? This is your indicator. This is what's guiding you. So the same way we look at SPY, we need to look at ADD. And days where ADD is flat, moving sideways, like this day right here, that is a day you do not want to trade. That's a day you want to walk away and say, look, market is choppy. It's not a high probability day. I'm walking away. I do not want to touch this. So days like this, walk away. Get out of there. Go do something else with your day. Don't stare, don't sit there looking at the screens. So this is an absolute must as well. And just to go over the lines, so I have it marked at 0, 1,000, 2,000, 3,000, negative 1,000, negative 2, negative 3. And that's about all the lines you really need. It's a trade in this range. And, for example, if we're trading down here, that's towards the bottom. That gives you, that tells you that we're pretty freaking oversold right now, right? That means we're towards the bottom of all these stocks. And I think these numbers correlate with the number of stocks in the New York Stock Exchange. Don't quote me on that. I might have just made that up. But anyways, point being, if it's down here, it gives you an idea that we're oversold and we should see some kind of a bounce. When we're all the way up here, we should kind of see a little bit, come down, cool down. So you kind of see it going up and down, up and down. So that's how I have it marked up. For options, how do you know what price to trade, specifically for stocks breaking all-time high? So that depends on your strategy, Osama. Osama, if you're scalping at the money is the best strike price or near the money. Yeah, exactly. So if you're scalping, typically you want to stay at the money. I'm not going to lie to you. Okay, for scalping, so what you want to do for scalping, I'll actually pull up my option chain. Give me a second, I'll show you. Let me pull up Tesla. Let me pull this option chain. So the way I do it, and I think Danny does the same thing. I mean, I think everybody typically does the same thing. So what you want to look for when you're scalping is you typically want to be, that's a bad chart. All right, let me see if something has actual numbers on there. Okay, beautiful. So, perfect. So when you're scalping, you want to trade typically either, this one, so from here to here. So these 1, 2, 3, 4, maybe 5, or maybe one up. So that's the range I look at. And around here, what I look for is the highest open interest in volume. I want to trade the stock, the option, the strike price with the highest open interest and volume, right? Because that'll have the lowest spread typically. So, you can get in and out at a better price and quicker. You can get in and out quicker. Yeah, exactly, Danny. In and out fills. So typically just, look at these 4 to 6 range and trade the one with the highest open interest, right? So if this was Friday and I was scalping, I would take this option, this strike right here, simply because it has the highest open interest, highest volume, which means I can probably get in with a lower spread, meaning the difference between bid and ask, which means I can get in at a good price, I can get in quickly, and I can get out at a good price, and I can get out quickly. So that's how I watch these. And also, if I think it's more of a riskier scalp, I'll typically go in the money, typically around this one or this one. I look at these two to get in, typically because if I'm wrong, I'll end up losing less just because of the way the options are priced and theta, and we can get into that some other day. But if it's a higher risk probability, I trade one of these two strike prices here. And if it's a higher probability trade and you think it's really gonna, like, you're very confident in your setup, then you can go further out the money. You can go around here and pick the one with the highest open interest and volume. So you could have taken this one, typically because that will, it'll make you money a lot quicker. Simply as that, right? It's more risk, more reward. So again, it depends on how confident you are. No, bro. I typically stay around here, man. So typically, like I said, most of the time, I'm just looking at these 4 strikes right here, and I'll just take the one with the highest probability. But I know Osman, he likes to play these out the monies with the freaking high volume, but he's got the balls and steals, bro. I'm trying to work my way up there, but I'm not there yet. Um, so that's that's typically how you do for scalping. Day trading is a little bit different, and I do for swing trading I do different as well. If you want me to go over that, just type it, and I'll go over those as well. But I think most of you guys are scalping nowadays anyway. So that's how I do it. And also a very key point, and I'll discuss the details of it later, of why it's priced that way. But Monday, Tuesday, Wednesday, I trade this week expiration. Thursday, Friday, I trade next week expiration. And that is simply just a rule that I have set in stone for myself, because I've tried, doing this week expiration on Thursday and 0 DTE, and I've lost a lot of money over and over and over and over again. So my rules are Monday, Tuesday, Wednesday, I trade this week expiration. On Thursday and Friday, I will only trade the next week's expirations. Simply because it's less riskier, you lose less. You'll also make a little bit less, but I'd rather make a little bit less than lose a lot more. So that's what it comes down to. Okay. Does anybody have any questions, any setups? Anything you want me to look at, go over? You guys could unmute yourself if you want to ask on that too. Anything you guys are looking at for yourself? Anybody want to share some of their great setups so we can all bank on? My man, you the GOAT, bro. But you're only gonna trade Microsoft anyways, man. Don't front. Wake up and just scalp the shit out of Microsoft, and that's it. Facts. No, that's the truth, bro. I mean, I typically only look at Tesla too nowadays. It's just so much easier. Somebody's trying to get in. All right, so I guess if nobody has any, can you review a SPY setup where you would have scalped, and what your chart analysis would be like for options? SPY. I actually do not scalp SPY. I used to scalp it, but it just doesn't pay too well from my experience. So I actually stopped scalping it. But typically the way I used to do it, right, yeah, unless it's trending, it's very hard to scalp in my opinion. But the way I used to do it is I would start on the daily chart, set your key levels, right? So, over here, if I was looking at it, obviously this around this area is a key level, right? Around the top of this area is a key level. And just work your way down to the 4-hour chart. Look for what you're looking for is major areas where you had a big breakthrough, right? Like, for example, here it broke through here and had a nice run up, or areas where it had a big reversion or reversal, right? Where like around here it came down, had a huge reversal, right? And here had a nice bounce back, or up here had a nice reversal. So you're looking for areas where it made a major move. On the daily 4-hour and 1-hour, look for these areas, right? So on the 4-hour, this would definitely be an area, right? We see it came down, had a huge move up. So it's telling you at this area, there's a huge level of buyers sitting there, right? So you're looking for these key areas, draw them up on your line. And then you just look, when you're scalping it, just look to see if it either bounces off of there again, or if it breaks through these areas and has a nice move up. And another setup I do is on the 5-minute chart or the 15-minute, whatever you prefer, I will draw the pre-market high and the pre-market low. No, Danny, that's just where I start drawing my levels. So like I'll start on the daily, I'll draw my support and resistance. I'll go down to the 4 hour and I'll draw my support and resistance. And by support and resistance, I don't draw every level. On the daily and 4 hour, I'm just looking for really key levels where where if it broke out, had a nice move out of it, or if it had a nice big rejection from that level, right? So really levels where big moves happen. And the reason for that, because the whole idea of scalping is you want to catch a small piece of a big move, right? That's where you will get the highest probability setups. That's where you can size the hell up and make some good money over and over and over again. And typically, if you're trading these larger levels, you will avoid most of the fake outs to begin with, right? And I'll answer your question as well about fake outs. But the biggest way to avoid fake outs is only trade these key levels. And again, what are key levels? Key levels are areas where either like this level here, right? Where when it broke out in the past, it had a huge move up, right? That tells you there's a huge level of buyers here. Or a level where it bounced from and had a huge rejection. Those are the levels you want to be trading, where there's a big demand between buyers and sellers, because that's where you will typically get a huge move. And that is where you want to scalp it. You want to catch a small piece of that big move. Simple as that, right? And you can use the squeeze setup to kind of gauge these levels as well. You'll see when you start using it, they all line up. Everything kind of clicks, it lines up perfectly. And another level that typically for scalps works out nicely on the 5 minute or 15 minute is pre-market or highs and lows, right? So on this day, for example, if we're looking over here, we see this is a pre-market high or the daily high for that day, and you see pre-market it bounced off of that again, right? But if we were pre-market over here, the level I would have drawn would be not that one, like right around this pre-market high, right? So that would have been a level. Unfortunately, this move happened pre-market where it broke out of that and it ran. So now my pre-market level would be right around there to this level. So during open, I would be looking, let me zoom in a little bit. I'd be watching this level at open to scalp it if it moved up. So you see right at the open, it broke up, it respected that, had a nice move up. So that could have been a nice scalp, right? So same thing to the downside. You can do the pre-market low and the high. Me and Izzy, we actually used to do a lot of the lines. Like we used to mark up, honestly, all these lines on the 5 minute. Like we'd mark that up, we'd mark that up, we'd mark that up. But it really was not the highest probability setups. We would get faked out more than we would end up making money, right? So we ended up, just kind of cleaning it up and just taking the higher probability scalps. And if you mark your levels right, you will get at least one a day, right? If it's not chopping. If we're trending, you will get a nice breakout typically, right? So again, start with the daily, mark out some key levels that you see, go into the 4 hour, mark out major areas where you had major levels of price movement, right? Major rejections. Do the same thing on the 1 hour. See you can boom. It came down, bounced off hard, right? So if price comes back down here, we're watching for a breakthrough or a bounce up again, right? To the top side, boom, right there. You have a nice level marked right there. So if this SPY breaks out of this, that could be a nice scalp. And so typically those are the two main levels we draw up. The third level we draw and watch is pre-market high and low. And then the other thing that we watch heavily is what do you call those? Having a brain fart there. Chart patterns, right? So if a stock is trending, then we will look at chart patterns like a bull flag. Is it making a rising wedge, lowing, a decreasing wedge? So then we'll actually, draw those up and trade those as well. Or if we're making a bull flag. But realistically, when a stock is moving sideways, even those are not really high probability setups. You will get faked out more, over and over again. So again, For example, Tesla. If you watch Tesla, you'll see it makes a lot of patterns. When it's trending, it will give you beautiful patterns day in and day out, right? Boom, broke up, made a nice little bull flag, wedge, whatever you want to call this, broke out of that. Again, beautiful, right? So, around 11 o'clock, it starts dying out. So, you walk away. Um, Again, on this day, same thing. It made a nice pattern. Boom, bull flag, breakout, consolidation, breakout. And most, stocks, when they're trending, they will give you these chart patterns. So we watch those when stocks are trending. We'll watch and play those. Um, Hope that clarified the levels on SPY for you. As for fake outs, so that's a good question because I actually struggled with that for a long time. I used to get faked the hell out like every single day, every single trade. So the best advice, number one, is if it's a choppy day, don't trade because you will get faked out. Number two, only trade key levels. Don't make up levels. Don't try to kind of, like see this is too cluttered, right? And I just have this from my previous scalping charts. But don't trade lines that you're just making up for the sake of making up. If it's not a key level, if a major move did not happen at that level, don't trade it, right? And yeah, it might be a level, and your level might have worked out, but it's not a high probability setup. We don't care if you're right. We're not in this to be right. We don't care if it's right and you're wrong. Nobody gives a shit. You're in this to make money. So, even if you're like this little, if you drew a line right there, for example, and it happened to play out perfectly and it made a big move there, who cares? It wasn't a high probability setup. We don't care. We don't care to be right. We just want to make money. So we're looking for high probability setups. So draw lines, draw your support and resistance lines and your breakout levels where it made a major move, because there's a high probability when it gets to that level again, it'll make another major move so you can catch it, right? Otherwise, we don't care. We don't care to be stuck in the chop. We don't care to be right. The market owes us nothing. Nobody gives a shit. Nobody cares if you're right. If you're wrong, it doesn't matter. So be patient. Wait for your levels. And those two pieces right there will help you avoid 80% of the fake outs. And regardless of whatever you hear anybody telling you, use this indicator, use the cloud, use Fibonacci's, use Bollinger Band, ADMA, even tape. You hear tape going around a lot nowadays. Use tape. At the end of the day, if you're trading the wrong levels and you're trading on the wrong day, you will get faked out no matter what you do. Even if you're the greatest expert on tape, you will get your ass handed to you. That's just straightforward. That's 80% of the game. The remaining 20% comes down to two more things. Number one is confirmation, right? So if you're scalping, you want to get confirmation on your scalp, right? And everybody does it different. So there's no one set method for getting a confirmation, right? Like you'll see, for example, Masi and I think even Usman, they'll wait. Like if they're scalping the 1 minute chart, they will wait for the 1 minute candle to close with high volume, and then they'll watch the next candle to see if it starts pushing up as well, and tape confirms it. They'll get in and take that trade. And that's typically what most, I think, scalpers generally are using as well. Maybe they'll vary it a little bit here and there. But there's ways and there's times where you can get into a trade, you can get into a scalp before it breaks out of that level, right? And the way you do that is based off of level 2 and time and sales, aka the tape, right? So if you're looking at the tape, I think this is actually moving. Yeah, there you go. So if you're watching tape, you can get an idea of when the stock is about to break out. So you can enter right before or right at that breakout level. And if you're scalping, every cent counts, right? So you can catch a nice move. So to answer your question, again, 80% is don't trade on choppy days, only trade key levels. And the 20% is wait for, have some system where you have a confirmation, right? And it could be, what most people are doing, which is, and again, it's not foolproof. What they're doing is, they'll wait for a breakout. Well, you want to see the breakout on the bid. And a lot of times, this happens a lot. Is, for example, if we're watching this level, let's say this level is 31.59, right? If we're watching, we want to scalp a breakout at 31.59, and you're only looking at the candles, you will see this candle peek its head above there, and it'll be there, right? So you'll think, oh, wow, we've broken the level. But if you go look at the bid is still under 31.59. The bid has not gone above there. And I have seen that so many times, and it happens a lot, right? Where the candles are above there, but the bid is not there, which is all that's telling you is, yeah, a few, orders got filled, but the buyers have not passed that level. They've not accepted that level. So it's not a breakout yet, right? So don't look at the candles for a breakout. Keep your eye on the bid, right? If we're watching 31.59 for a break, you want to see 31.59 come on the bid, right? And you want to see it strong. You want to see 31.59 come on, and you want to see it hold 31.59. You don't want to see it come back below and then go back up and then come back below, then come back up. That's telling you buyers are weak or that the breakout has not been confirmed yet. A strong breakout, you will see this break 31.59 and you will see it hold, right? You will see this level hold. You will see bid size increasing. You will see this turn green basically, which is saying your bid amount is increasing. You will see the ask increasing, right? Sellers are moving their levels up. You'll see the size decreasing. So there's a bunch of things to you can look at on tape. And Danny actually gave me that gave us the idea of recording our trades. So we're actually going to start doing some of that this week. We'll record some of the scalps we do, and if it's a clean example of the tape, we'll do a voiceover and send it to you guys as an example. Just the things we're looking at on tape for confirmation. But just again, how to avoid a fake out? 80% is going to be those two. Don't trade on choppy days. Only trade key levels. The remaining 20%, I guess you can say, is going to be wait for a confirmation. You don't need to be the first man in. If it's going to be a strong move and you're trading on a day where it's trending, right? If you're trading on a day it's trending and you're trading a key level, you don't need to be the first guy in, right? Don't feel FOMO. Wait for the candle to close. Wait for the next candle to show continued strength. If it's a clear move, if it's on a day where everything is trending and you are trading a key level, if those are lined up, this will make a huge move. It will make a big enough move for you to get in, get your piece, and get comfortably. So do not worry. Do not try to be the first man in, right? If you are getting those things right, you will have enough opportunity to wait for this candle to close, to make sure it was on high volume, to make sure the bid is holding above that level, to make sure the next candle does not quickly come back under and reverse, right? So you want to see the second candle start pushing up as well, right? You want to see it, you want to see continued strength, and then you can get in, take your piece, get out. And typically, if you are scalping the right levels, the right days, and the right size, you only need one green candle to make your day, right? Because again, remember, with scalping, you're going in with larger size to catch a smaller move. You want to catch a smaller move. You want to catch a smaller piece of a bigger move, right? So if you wait for that first candle to close, you got high volume, your bid is above your breakout level, the next candle is also pushing up, get in. And typically, that one candle, that one nice green candle, hopefully, if it comes, will be all you need to make your day, get out, you're done for the day, that's it, right? And now here is the last cold, hard truth. Let's say you have all of this packed down, right? You do everything right. You trade on the right day, you trade at the right levels, you got all the right confirmations on the tape. You can still get faked out, right? That's just the nature of the market. There is no guarantee. There is no 100% guarantee. So even if everything is correct, you will get your ass faked out, right? There's no way to avoid that. So that's something you need to accept. You will be faked out. If you're scalping, you'll probably get faked out. I want to say maybe 30, 40, even 50%, maybe 60, 70% of your day, right? That's just a reality. So so if you're looking for a surefire way to avoid fake outs, you're not going to get it. And if that's your mentality, do not scalp because you will get wrecked. Right. So there you go. And that's another strategy, the retracement level, which is basically if it's a true level, true breakout, it'll break, it'll come and retest that level, and if it holds, that's a confirmation it's a strong level. You can get in and take it. And Danny does, he kills his trades with that. So that's another great strategy. And so Danny's strategy is actually even more of a higher probability strategy than the one I told you. But it requires a lot more patience. So God bless. But again, back to the point. No matter what strategy, no matter how good you are, fake outs will happen. Accept it. Accept it. You need to accept that. That is why risk management comes in, stop losses kick in. That's why those are so critical. Because you will get faked out, you will get stopped out. It's okay. That's part of the game. Wait for the next setup, get back in. Simple as that. Okay. Hope that answered your question there. How do we use volume average indicator? Man, all right. So that's another heavy topic. So to simplify, the best way to use the volume average is on the daily chart. Leave it, when you pull up the volume average indicator, right? Just type in volume average. Volume average. Come on, wait. Never know. Wow, that took a while. Okay. So volume average is this one. You double click it, it'll come in there. Just leave all the default settings. It's set to 50, meaning 50, the last 50 candles. So very simply, all this is telling you is the way I look at it is I look at it for my swings. If it's breaking out or if it's making a move, I look to see if we're making a move on low volume or higher volume, right? If we're, for example, all along here, right, we were moving up, this whole trend up, we're moving up on below average volume, right? This yellow line is your average volume, meaning the average volume for the last 50 days. If we're moving up slowly on below average volume, that's telling you we're moving up. It's a weak move up. It's not being supported by real strength. So if we're moving up on low volume, you should expect some sort of a pullback, right? Because it's not a strong move up, right? And when we have, for example, when we're selling off, right? When we're selling off and a high volume, like these days where it's above average, you can expect a continued trend in that direction because basically it's telling you big money has the direction and they're coming in heavy and they're backing up that direction, right? Same thing to the upside. When we start breaking out to the upside, you will see high volume kick in and you will see on SPY where like around these days above average volume, the uptrend is confirmed. It's same thing when you're scalping, you're looking for high volume, same concept. If you're scalping, I really don't use the average volume anymore. It kind of typically gets me, you confused. If you want to use it, you can just change the setting to the 20. So it'll show you the last 20 bars. So this is the chart setup I have for scalping. This is how I use it. I got the news over here in case anything comes out. I have it down here as well, the volume average. But I don't really look at the line. I just look at the candles to see, if we're actually making a higher candle than before. If, volume is dying out, you can see it. So I don't really look at it too much. Yeah, bro. Thank you for hopping on. Good luck. I'll see you in the morning. So again, I don't really use it for scalping. I just look at it's there anyways. It can give you an idea, right? You have you have higher than average volume there. But again, I don't use it too much in scalping. I just look at the actual candlesticks to see what they're telling me. I have my level 2 here. This is my active trader, level 2 active trader, time and sales. Another good hint or a good tip for you guys, I actually learned this from Osman, is on your scalping setup, you want to make sure the grid is on. These lines, make sure the grid is on. It'll actually help show you so many more levels without cluttering your screen. Like you can really get some nice levels out of this. Like for example, this one right there. Ah, shit, what did I do? Where was I? Anyways, when you have it up, it'll show you levels when you're not even looking, so you can actually find some good scalp setups, right? Like right there, this line, boom, nice hit there, and a hit there again. And if my grid wasn't there, I probably wouldn't even seen this. So this is a nice double top. You could have taken this short, played that. So just go to Danny, just go to settings, go to appearance, and down here it says grid. Just make sure it's checked. If you uncheck it, fuck what I do. So if you click that, click OK, it'll uncheck it. And then if you go in, so for example, when it's unchecked, I probably, if I was really looking, yeah, I could have caught this. But then I'd be trying to draw lines on my 5-minute chart, doing this, that, blah, blah, blah. Right? As opposed to that, nice and easy. You go to appearance, enable the grid, click OK. It shows you right there. It's super easy to catch, and it shows you so many levels throughout the day. It's honestly super useful. You can see even in the morning. Look at that. Boom! It's being rejected. Look at these candles getting rejected right off of this area. And lo and behold, it was a pre-market level as well. Look at that. Boom, boom, boom. So you could have drawn this on, as a setup, right? Hey, if I want to scalp, I can play this breakout. To the downside, generally we're kind of hovering around this area. Boom, break, clean rejection right around this area, that 1220 mark, right? Boom, bounce off of there. So this works very well with almost every scalping setup. So I highly recommend that actually. Yeah, bro, try it out. It was a game changer. How do you execute orders on active trader like if you're trading Tesla? So the way I do it is, I have my option chain pulled up over here. The way you do that is very easy. So let me pull up the option grid for you real quick. So this is the option grid, right? So in my setup, I have another screen where I have this, and I see Tesla making getting close to my level. I'll come here. So as you can see, what I did is I linked this to the lilac number 9. So what I will simply do then is on my option grid on the other screen, you go there, right click to the option strike you want to move, send to lilac. It'll fill this up with that option grid. So this is active trader for that actual option strike. And then, you simply just click buy. If you click buy there, it'll put the limit order to buy. If you were to sell, you can sell it there. You can put stop loss orders here. But it shows you where the bid is over here. It'll show you where the loss, where the sellers are. And I use level 2 on this as well, because sometimes this ends up lagging because recently Thinkorswim has been lagging heavy. But if you have level 2 up on that actual option strike, it'll show you exactly where the buyers and sellers are. So in case you get a lag, you can just kind of, figure out where you want to sell it at, where the bids are, where the ask is. So that helps a lot. It's a big save nowadays. And in terms of an actual practical example, if you go to YouTube, look up Umar Ashraf and his stock market, maybe some of his stock market lab page, but he has a good video of how he an actual live example of how he's using it during market hours. So that should help clarify that as well. Any other questions? All right, cool. So what we'll do is if you guys have any anything I talked about you want me to really dig into and have like a full just session into that, just let me know, comment in the chat or something. Maybe we can schedule something, do it next time. But if no other questions, no other comments, setups, whatever you guys have, I think we will call it a day. Got you, man. Thank you guys for coming. Have a good night. Get rested, and we'll see you guys bright and early in the morning. You got it, guys. Have a good night.